All right, guys. How's everyone going? How's everyone doing? I'll give it a second for people to join in. You guys see the screen all right? What is this one? Oh, yeah, it's a different thing. Okay. Well, we'll get rid of that one. We'll keep this one. It'd be nice if we had some engagement in here. It'd be cool. Hello, hello. You guys shouldn't have ads, though, at all. If you guys do. I'll start when somebody gets into the chat room. If you guys start typing, because I kind of want this to be engaging. We're not just all sitting here listening to me talk. I talk a lot. Live trading, I'm talking all day. Yo, what's up, fool? What's your real name, Full Send? You don't have to tell me your last name, obviously. I don't know why I said that. What's your first name? So I don't have to call you Full Send. All right. I think I'll go ahead and get started. I tweeted this one out. What's up, PK Nip? What's up, Pat? Yeah, I know. I got you guys. That's why I'm sitting here waiting for the ads. I just figured this would be a good spot to do it in here. Not only just so we can get the Discord in here, we can get a chat going, but I'm also doing this like on I put it on Twitter, so this will be like kind of like a quote unquote free thing. We'll put on some music. I do have this recorded too, just a friendly reminder. But yeah, okay. I guess we'll start it here. Should be good. I think we got a good amount of the Discord people in here. Obviously, some people don't ever tune into like the learning segments because they don't care about that. They just want alerts. That's fine. All right, let's go ahead and start with SPY though. I have it on a replay mode. Right, if we take a look at the daily here, it's a pretty hard read, right? It's a very, very tough read. But what we're essentially we were looking for, and I don't know if you guys can see, right? The daily's pretty jumbled, right? You're kind of trading within a lot of previous day ranges. You're not really breaking out of this. I would say like 445 to we can pull it to the high like 453, right? It's about an 8-point range. But more recently, you've had 4 bars that have been trading within 450 and 445. So $5, right? And it's pretty hard to figure out where you're going to bounce at. That's why I said the market would be pretty hard to trade because you guys can see, right? You don't really have anything here. It's one day of or singular bar of a low and a high, right? You kind of have a confluence between this high and this low, but you don't really have multiple days of consolidation. The structure is very weak. But there's one recurring thing that's kind of happening here that we can base our trade ideas off of, and you don't want to have a bias necessarily, but you kind of have to have an idea of what might happen. Does anybody know what I was looking for here, right? Remember, this is technically yesterday. You guys can see, and this was the homework assignment too, right? Kind of what I was looking for, but there's a theme on this entire little segment right here, right? Does anyone know what it is that you want to look for if we're looking for structure? And don't be shy, y'all. Don't be shy. You guys can type it. It's a very quick 2-syllable word. And this is how I want your, yeah, there we go. Pat said it. Pat is A+ student. That's immediately what your eyes should go to, right? Forget falling wedges, forget all that crap, right? We can worry about that later if you guys want to trade like that, but really just looking at structure. We have, right, you're starting to go into a downtrend here, obviously, but you have this high here, a lower high, I'm sorry, you have a high here, a new low, lower high, lower low. You can call this kind of like your lower high here, right? And then a lower low. So really the market's in a downtrend and you want to be looking for those lower high opportunities on low volume and just weakness at previous levels. So that's kind of like your directional bias, right? But you are, right? I mean, that's essentially what a falling wedge is it's a constriction of price, meaning that the sellers are losing control to push price further down. So you want to start eyeing where this could potentially catch a nice bid, right? Everybody kind of knows how I trade, right? We know here on the hourly that there's the daily gap fill. This is where I like to watch for potential bidders, right? You guys can see this on level 2. You guys, if you guys have a book map, you should be able to see them lining up bids. But just kind of like an obvious thinker, right? These guys have ground on sellers that are underneath. So they're going to bid here, right? And sometimes you're going to get market orders that break through these limit orders here, and that's where those wicks kind of happen, right? Wicks will come through, they'll pierce through, and then the orders will suck it back up, and that's why you see those candles. Now you're good. I understand if you're at golf, you're fine. But yeah, we were looking for some kind of lower high to happen here, or if it traded down, right, alongside trade off 441.91, right at this gap, right? Call it a gap prevention, right? So if we go into like the 5-minute now on the daily, essentially what I was looking for, right, was so this was 448. This was the initial high of yesterday, right? And then it had this slow volume melt up, right, up to this level here. We had previous day. I'm not going to tell you guys where it was just yet, but I mean, I have it already marked. We'll save this for a little bit later. But if we hit play, right, the market opens. We have our high right there. We have this gap now as well, right, this overnight gap session. But we're still trying to kind of clear above into. Now what ends up happening is the market opens and it immediately sells off, okay? Immediately sells off. It taps 448. It respects that level. So now we know that 448, very valid level right off the open, okay? This is where I wanted everyone to identify this, okay? So market ends up just chopping. Most people kind of ignore chop, but we need to understand what's being developed during chop, okay? We should all kind of know the answer, right? Especially when you start to see relative equal lows or relative equal highs, right? Understand what's actually happening. Bids are lining up at the lows, asks are lining up at the top, okay? So that is essentially what's happening. You're having orders being built over and over and over. And it's good, right? This 448 level is huge. This is a very, very respected level, so we want to keep it marked on our chart the entire way, right? Now what ends up happening is we chop here for about, I don't even know, man. I think it was like 2 hours, wasn't it? I don't know the exact time frame of it. But eventually you guys are going to see we have a slip underneath it, right? And I want to pause it when that ends up happening. Okay. Slip underneath. What should happen in a picture perfect world to validate a short thesis? Anybody? I'm probably just going to be Pat. That's typing. Pat, I'm going to put you on. What should happen right here? With that much liquidity grabbed on this, right? This is kind of, I would consider this an imbalance candle. But for something that quick with that much volume, right, what ideally should happen? You're good. Take your time. I wish there was more people in here. Got 30 viewers. That's a sweep. Yeah, that is a sweep. But what should happen? Key level broken. It's one word. We won't move on until you guys get it. This is key. This is absolutely key. Oh, you guys are taking too long. I'll give it till 4:45. Retest. Yes, thank you. K-Dog, what's up, man? How you doing, buddy? Okay, retest, right? What's going to end up happening is it pushes through these lows right here, these relative equal lows. Remember what's here. These are all buy stops more than likely. People are buying at the lows, and they're probably setting their stop loss just below. If this knifes through, right, typically those orders are going to fill, and you're going to see a bid push it back up, right? So those guys get the orders filled. It moves back up to their stop loss, or maybe just to their level, right? Let's say they didn't get triggered. This is an opportunity for them to get out break even. right? That's kind of what it is, right? It's orders getting filled on those wicks, and then it pushes back up, retests the level, and some people, if they can't get it back above that level, they'll just close out their longs, right? Now, what ends up happening here, right? No retest. Oh, okay, it's in slow-mo. I don't know how to turn that off. You guys are good. You guys are good. I can maybe slow mode. See if I can turn this off really quickly. Okay, no slow mode. Hold on. Off. There you go. You guys should be able to type very quickly now. Let me know if that's good. I think Twitch is going to be cool, though. There we go. Cool. Now, there we go. My bad. Okay, so was there a retest on this? No, right? No retest. What should everyone's ears be doing? Perking up, right? You guys should be perking up because you don't want to necessarily go short on this. It's a very risky short. You'd want to go short on a retest of this level if sellers can continue to hold here and buyers actually can't push it back above this old support, right? And there's a lot of liquidity here. There's a lot of buy orders. This is going to be flipped as kind of a potential resistance, right? And you can go short if it fails to get back over, and that's how you get your nice clean breakdown, right? That's when you get that a lot of volume coming in. You can kind of feel safe once it starts to travel away from that with a good stop there. But this doesn't retest a very, very key level with a ton of liquidity. Instant red flag. You need to be like, okay, there's relative equal lows. There's a lot of liquidity here. And remember, the market likes to draw to liquidity. Fuck everything else that you guys have learned, right? Market goes to liquidity. And there's a ton of liquidity here at this 448 level, right? Now start thinking, right? If you could have probably joined on the short, but look at, I don't think you really get a lower high. You get maybe, yeah, you get like a 15-minute bar right there where it slightly pulls up. You got to think on a 15-minute time frame, this is just a wick, right? So that's not really an entry. Look how aggressive this sell-off is. Look how quick it's happening, right? Selling off, selling off, selling off. Now you guys all kind of know where I went long, right? Maybe that could have been a lower high. You could have shorted potentially. But really, you're not getting many retests. And the key level of the entire day with the most liquidity was never tested. Okay, so this pushes down. What do we get here? This is my first long side trade. I took this on live trading with you guys. Remember what I said, gap prevention. These guys here that sealed this gap up are all going to have bids likely lined up just above or at the level, right? And then sometimes you'll get market orders, right, which are the aggressive sells or the aggressive buys above the ask or below the bid that will push it down quick, and then limits will pull it back up. So you got to think, you got to give it a little bit of a buffer if it does break under. That's why I like to wait for those wick developments if it does break into the gap. But yeah, we were looking for longs here. This is a huge spot, massive, massive spot. Looking at the daily too, kind of the range is broken, you know, under these lows here. So this is an opportunity for bears to really get it down, but you got to think buyers are going to be here. So we end up getting some kind of hammer here, decent volume, right? The sell-off off this lower high, if you guys are looking, decreasing volume leading into the hammer. It's a good risk reward, right? I ended up taking calls here. I really regret taking calls here. Oh, you're good, Bewit. Thanks for tuning in, buddy. But I regret taking calls here. Do you guys know why? Right? I mean, I talked about this. This is like FinTwit trading. You guys don't want to be taking calls off of this here. What do we need to wait for? Yeah, exactly. I mentioned on live when I took this trade. And remember, a lot of you guys will get, when you guys take trades, a lot of you guys will be like, oh, I wish I could have held longer. I wish, and it's because you're getting into stuff when you're scared, right? You're getting into stuff when you don't have confirmation. Everybody does it, right? Admit it. I admit it. I do it from time to time as well. But one singular bar here, right? If I catch this and it starts to rip, there's no guarantee that that's not just another lower high, right? Which is still very valid. And I remember bringing that up, like, okay, hey, my target on this trade is here, right? Maybe a pushback to the lower high, and I'm going to be out. I took contracts from 1.719 to 2.5, right? But really, if I waited, look what ends up forming out. There's the lower, or kind of the lower high where I was thinking this could go to, right? It ends up selling off, but what is this right here? Right, we're starting to get that change of character, okay? Two higher lows is ideally what you want to look for, but you can't sometimes do it on a 1 if you want to be a little more risk on. This was a perfect opportunity, right, to potentially hold on to that winner, right, maybe scale out into this level, or take fresh longs off of this higher low, right? I'm not even worried about the inverse head and shoulders. Sure, you guys can look at it that way. I was not paying attention to that, but you get gap defense, very high volume, presses out. Sellers are able to sell it back down, but look at how weak that sell-off is, right? And then you get your first higher low here. This was the spot I should have taken calls at, because now, right, I'm not super worried about this failing the gap because I know there's bidders here, and I know bidders are also being aggressive, right, in stepping up their bid, right? They're willing to put risk on the table to try to push this higher. Now this is where, you know, this would have been a sick trade because you take it from here now. Where's the liquidity that was untested? I put this on Twitter, right? This is how you got to start thinking about in terms of targets. What is the most likely area this is going to retest? Right? We should all kind of know. It's this spot right here. This is how you get your red line. So now this is going to act as a resistance. But there's two parts to this, right? This is the homework assignment that I had you guys do. Yeah, 448, perfect job. Now this is the homework assignment that I had you guys do, right? Liquidity here, right? And then there's a high right here. But there's one aspect that I wanted to like kind of emphasize on that homework is you're trading lower highs, right? What is this right here? We caught a bottom, but we have to still think about the bigger picture. This little spot up here, right here, the high day from today, what is that technically? We zoom out just a tad. That's still a lower high. Exactly. So I had this in mind for this being the lower high and the risk, right? I wanted to trade with the trend. This is where I got my purple line, 449.23. But there's one last aspect to this entire trade that I want you guys to look at. These are relative equal lows. What's above this? See if anyone can get it. It's pretty easy. I just said it not long ago. Relative. These are relative equal highs as well. No, relative equal highs. Did you notice my chart, how I had it like this? Go back and look at my chart when I was posting in my trades. So there's liquidity not only at the downside, but there's liquidity at the upside, right? Remember, this is what I was saying, both sides could potentially get swept here, right? And then you were looking for a failed break, some kind of sweep over that level and just shy of this level here, right? So let's mark this yellow. Yeah, so if you remember the homework assignment, remember, look at how all my charts are. You notice how they're kind of the same thing, where you have a high, right? And then it pushes up and makes a new high kind of into the gap just shy of the previous high. I'm looking for these areas to get swept. It's still within the confines of a lower high, but the intraday high, I'm looking for it to sweep, right? So kind of the same thing here. And I don't want to make this too confusing, but it's about understanding liquidity, okay? So remember, understand liquidity here. Does this level get retested? Absolutely not. Does not retest the breakdown. So that's in the back of your head, okay? Market moves down, moving very, very quickly. It's hard to get in on that trade, right? I mean, unless you're just chasing the contracts, you'll get lucky sometimes. Most of the time you won't, right? But it does break down. We get a gap defense here at the daily gap at 445 and some change, right? You get your hammer candle. This is where you got to fight that impulse control. You know, it happens to all of us where you do take these, but this is why sometimes these will just fail really quickly because you're getting in without confirmation of a new trend developing, right? So hammer, sign 1, sign 2, you get a higher low. It's be ideal if you get a secondary higher low, but you could pull it here and just, but you at least have something to risk now, right? So now that we have our trend, right, we're looking for this to trade back and have a drawback to liquidity. Where's most of the liquidity at? We all know it's here. So 448 is your target, right? And if you guys aren't very good at holding, I mention this all the time, use your 9 and 21 EMA. These are starting to curl. right? What's that right there? This is your entry. Starting to build somewhat of a base on this previous kind of high right here, right? This lower high region, you're starting to base on it, and you're also getting your secondary high or low. This could have been your entry right here. Okay? Pretty easy trade so far if you just wait for confirmation. And a lot of people get so greedy because they want the 445 fill to 448. You know, this right here, a little bit better of an entry, but you know, just be okay not getting the entire move, but getting a safer entry, right? Waiting for this secondary high or low. You have your change of character, right? You get this move out from 446 to 440. It's still a hell of a move, right? You don't need to be greedy for that, all that other crap. Typically what you'd see is maybe this pull back down under this old level here, but it didn't happen. This was just a straight draw back to that 448 level. Okay. I remember I was kind of just guiding everybody just to watch this. Now what ends up happening now is you're getting your first test of that previous sell side liquidity, okay? Typically this is going to result in a rejection. This time it did not do it. So I started my contracts right here. If you guys remember, I think I started them right here and I went 20% right off the bat. But really what you want to watch is this push into this level, right? Absorb some of these sellers. Typically it'll come back down and sell off. But what we wanted to see is a push over to this. This is like your buy side liquidity up here, right? Because this side had a ton of orders still, right? What it ends up doing is it sweeps those guys too. And it does it at a very, very interesting time, right? 10 to 11. You guys, I don't know if anybody here, how many people have we got? 35. There's a couple concepts that I have kind of taken, like learned a little bit from ICT with like time trading. If there's anything you guys should learn, it's the ICT Silver Bullet, which is an AM and a PM session. There's a lot of things that I've always done, but I didn't really understand how to like, I guess like translate them to like how other people can see them. He's got some really good stuff actually, because we trade very similar with like, he doesn't use volume, but using like price, right? And understanding like where liquidity's at, understanding a lot of these things. And he has some good ways to explain it, right? So I would recommend looking at that, but from certain time frames, you're more than likely going to see sweeps on certain areas of liquidity. So 10 to 11 Pacific Standard Time for me is where it's at. So as it's like getting close, it's starting to move into this liquidity zone right at 11 o'clock. So this is why I'm on edge waiting for a short. I understand that this is liquidity here, right? Sell side's finally getting tested, and I'm looking just to see if they sweep this buy side, right, and stay within the confines of this lower high. So if you guys can take a look here, right, look what ends up getting swept. Just barely. And this is telling you guys, this is not random. These buy side guys, breaks out of them, right? Sweeps them if they have their orders there, and it ends up trading right back down, right? And now what we're looking for, if you guys saw, remember this level down here? This is a point of consolidation followed by a very big expansive move without a retest, right? Remember I said that's why I mentioned the retest would have been critical here, because this was a bullish order block. That consolidation, quick expansion of price off the level, no real retest here. This is what you think this would trade back to. All right, and there's a ton of liquidity here if you actually think about it, which I didn't look at previously, right? You have lows right around this range. We just extend it down a little bit. You have lows here, you have these highs, and then you have these lows here as well, right? There's not a ton here at the bottom, right? There's a big bidder that kind of started the rally up, but there's a ton of buyers here. So this is more than likely where it's going to trade back to. And then I had my trend line drawn right around here, because I wanted to see that level break. Is this making sense so far, everybody? Just wanted to double check. Because a lot of people will see stuff like this, right? And they won't think twice about this at all. You know what I mean? They won't understand that there's orders being built up here. There's sellers that are putting they're shorting the top and they're putting their stop loss above this. There's buyers that are buying here, putting their stop loss below this. There's a ton of consolidation here. Right before CPI, right? This sells off pretty drastically. It doesn't retest, right? It's going to move back to this liquidity. And everyone thinks it's over, right? Sellers think they're still in the clear, right? They're thinking, okay, it's going to reject here. No, it comes for them, right? And it sweeps out the top there, and it still trades within this lower high, okay? And then literally, you guys can see the wick. Takes out their orders. I wish it would have gone a little bit deeper. That would have been a bigger sell-off in my opinion. But same exact thing. Hits here, right? Pushes down. What is that? Look at the volume on that candle. Look how steep that candle is if we go to a 1 minute. Right, a little bit of a wick there, but this price action's pretty steep. Ton of volume in these 3 bars, right? Ton of volume. Look at that. That's some of the highest volume since what? Oh my God. Since this level up here, right before this kind of got established for the new move up. So everybody should kind of know, well, that's a boner candle, but that's an imbalance candle. This is when I told everybody in the Discord, right, to look for the fair value gap move back up, right? So fair value gap, ideally it would trade back up to wherever this last wick would be, but you can move it obviously up to the top of the wick. That's where I would risk. But yeah, so we had our fair value gap marked here. And to make things even better, right, similar to what we saw here, what we're looking for was that break, retest, sell, right? We finally get our chance here. This is what we should have seen right here. But this imbalance ended up, I guess you can call this an imbalance as well. This got filled way later, right? Now, imbalance candle / fair value gap, push up. You want to see sellers hold this ask, right? This is now a resistance. There's a ton of liquidity built here. These sellers got stopped out. You want to see new sellers now prevent and hold this level along with these other asks here, okay? Right, so we were looking for that fair value gap push back up or retracement into that level. I don't know if it's going to do it. Oh, it was on the 5. Okay, we're right. Hold on. Boom, right? Or you guys can look at it however you guys want to look at it. I looked at it that way. You can technically think this is like a head and shoulders, right? Either way, we want to now see this breakdown get retested, right? Boom, sells off. You're looking for a break under these equal lows here, which it does. And now you're simply targeting your order block, right? This is what we were looking for as a target. I think it's stepped down a little bit further, and that was it, right? And then after hours, I think it rallied just a little bit more. Yeah, kind of bounced off that level. I wouldn't be surprised to see it trade lower tomorrow with CPI. But yeah, that's pretty much that trade recap. That was a very, 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 very clean trade. Remember, like what we just saw right there with these liquidity zones, if it's an actual move, right? If it's a legit move, it will retest on that first break, right? Retest, and then we'll see if sellers hold it. If they hold under, then you'll typically see that sell off, right? And then kind of that push through that lower low. Anytime you see this though, key level consolidation, right? And it doesn't retest, look for it to gravitate back towards that liquidity there. But that's pretty much it. What's up, Snahal? Glad to see you in here. Is there any questions on that? Because you guys are going to see that a lot. Like, you guys already saw it here once, right? I'm so thankful it showed up 2 days later, because it was almost the same exact thing for this day here. Like to a T. I deleted some of my lines. This one was actually a fake break over the high, but same exact thing. You're still trading lower highs here. It broke over the top, right? We're looking from that the 10 to 11 o'clock time frame, right? It was like literally right at 10, I think, just shy of it. Same exact thing though. Pushes up. You see that volume on it too. It's very, very low for this entire move up. But you see the fake break over the high, it sells off, retests the old high, and then it continues with these drastic candles, right? This was the hourly imbalance too. If we could just break this down, right? We noted the hourly. I can already see it. It's like right here. I don't know how deep it goes though. I think it was here. But that was the hourly fair value gap, right? We were looking for it to trade up into that level. Starts to sell off. I think this is the night we swung, if I'm not wrong. But yeah, like these little spots that you got to be able to find, right? Like I could recognize these kind of candles instantly. Everybody should do the same. And then really being able to not, you can look for patterns. I'm not gonna ever take away patterns from anybody. I definitely still use them from time to time, but understanding like just broad structure, right? I'm on a 5 minute. You can see it a lot better on a 15, but just looking for structure, looking for volume at certain levels, looking for imbalances in the market, because contrary to popular belief, right? They just want a balanced market. Orders need to be filled. That's money that's available on the table, right? And then the auction will sort itself out. Whether people want to sell stuff or buy stuff, that'll sort itself out. But a lot of this is just filling orders, right? And if there's imbalances in the market, it'll typically fill those. Why do you think gap fills always work, right? Think about these imbalance candles as intraday gap fills that just happen very, very quick. Okay, I'm going to check out chat here really quickly, but this should be recorded here. Yeah, I have the record button all good to go. That's going to be it for the trade recap. I'm going to go ahead and end the recording. Okay, that's good. Okay, now I'm on stream. Yeah, I'll answer questions though if you guys have any questions. Hopefully you guys though understand that, right? Ask questions if you guys don't, but like this was literally the homework. If we go to the Discord really quickly, hold on. Homework. Like it was the exact same spot. Oh, it's not going to look good. Never mind. It's just going to be on my screen. Let's go back. I try to do something cool and flip it over. But that was, if you guys go look at the homework section, it was the same exact thing. I identified this 2 days in advance, right? That we were trading lower highs and we were just simply looking for sweeps over intraday highs and still trading within the parameter of the broader lower high, right? And we got that 2 days, or we got it that day and then we got it today, right? And you got to take advantage of those when you see those, because if you don't understand when you're in the moment, right? Because it's very hard, I get it, when we're trading to be in the moment, right? But that's why I really recommend, if you guys can, like sit back on 5, 15 hourly time frames. Obviously, start how you want to trade and get your ideas from the hourly, 4-hour, daily. But really sit back and just watch the development of stuff. And I always say it, see the trees for more than just the trees, right? You got to start to see these things on the fly, because if you don't, right, they come and go like that. And then typically you'll get caught, like when you don't realize what's happening, you're going to get caught maybe shorting here, right, at the bottom of this bar, and then you catch this move down, right? But typically, we saw what happened at the last like 5 minutes. This candle bounced back up a little bit. And that's why people get so pissed with trading, because they're not prepared. They don't know how to understand what's happening in real time. It's difficult. It's very, very difficult. But if you guys sit back, you guys really learn and digest what you see. And it's not just me, right? There's other great traders too that you guys can learn from. You guys can take little pieces from and really tie it into your own style of trading and really develop and refine your risk management. You guys can do this, without a doubt. But it takes a lot. Okay, chat. Okay, could you explain how you think about liquidity? Like, is it basically just supply and demand spots? Kind of, yeah. Like, so, best way to put liquidity, I'm trying to think of an analogy. Like, supply and demand, though, is, yeah, it essentially is liquidity, right? Like this right here. This could be a demand spot now. If it's like this would be an area that I would look to take calls off of. We understood that there was an order block right here, but now we have a low, a low, a low right here at this gap prevention. This is a demand, right? And we're starting to get liquidity built up here as well. Liquidity is just orders, right? The market cannot move without orders. So when there's certain areas on the I guess the chart, if you will, that really create very, very powerful moves or that build consolidation, that is liquidity. It's orders that are building up there. And the best way to think about this is we have zero control over the market. You, me, anybody in the Discord, we don't move hundreds of millions of dollars, right? And you got to think about it. When they want to buy big money, right? If they want to get 500 million filled of Apple or SPY, there has to be a seller. Who the fuck is selling 500 million worth of SPY? You know what I mean? How are they going to get filled for their buy order? Somebody's got to be selling. So they'll look for areas where sell stops are at. I mean, they can't find those orders, but they will try to trade and bid down the market and, look for areas where people will be able to get stopped out at to fill their orders. And it's not malicious or anything like that, but that's literally how you have to think about it, right? Which is why a lot of you guys, when you try to take trades, you guys think that you are, I don't even know, Carl Icahn or whoever, right? And you guys think, oh, a hammer candle here, I'm going to get in, right? You cannot move the market. You getting on a hammer is not going to translate into a huge win here. If another big buyer doesn't step in with you with hundreds of millions of dollars, you are going to lose on this trade every time, right? Which is why it's important to see trend development, because now one hammer here, maybe this is $200 million of a buyer, right? Now it pushes up, higher low. Maybe another guy's like, oh, you know what? I'll join on this trend, 500 million, and then you're starting to get big buyers that are moving, and all you want to do is backpack off of these guys. That's all you're doing. You cannot move the market yourself, and it's silly to think like that. And like that's why I hate seeing some of these like, oh, I snipe bottom. Like it's cool for sure. You can do it at times, right? I mean, I did today, but there's a reason some people feel so scared in positions, and they're like, oh my God, like I cut for a 20% gain and it went 90, 95, 100%. And it's because you're taking trades without confirmation, and sometimes you're getting lucky. You know what I mean? It's hard to hold when you don't really have anything to base risk on. You don't really, you're not understanding trend. There's a lot of little things in that. Sorry, that was a little bit long, but I'm glad I stopped the recording. Yeah, Calusa. Just got to apply it, man. Take it bit by bit. Like, today was a good time. Like, you could have literally seen the trend here, right? The first higher low, this higher low here, right? In this consolidation, right, at this order block here. You didn't even have to know it was an order block. You could have, you know how easy this was? Could have gone like here, right? I mean, if we're just connecting this one to this one, you could have seen that the higher lows are easily being developed here, right? There's a consolidation here. Take a risk on this with one contract. Trade it to sell side liquidity. Oh, wow. Before you know it, you'll be like, holy shit, that's actually really easy. Contracts here at this level, if you took SPY, I think they went like 0.42 to like 1.2 or 1.4. Like that, do you realize how incredible that is to like be able to like, see that go into your account like a full $90 just off one contract? It's very rewarding, and like just being disciplined with these things. So, but yeah, Pat, imbalances, fair value gaps are pretty sick. So market makers are more to balance the market. Yeah, that's exactly. Market makers they're not here to make money. I think people have a really big misconception about that. They're really there. This is just one giant auction, and they're there to facilitate price. That's all they're doing. And price can't be facilitated correctly unless the big boys in the market get their fills, right? And the big boys get their fills by certain areas getting drawn to, right, and then swept or just traded to, and then the market can kind of figure itself out there. But they trade to spots like this a lot of the times. Like that's why that saying goes, like gaps always get filled, because there are liquidity voids in there, right? There's money to be made in these areas. The market can be balanced at those areas. Fair value gap, more reliable. It depends, man. You can find them on, it just depends on your trading style. I can't give you a really definitive answer. You got to figure out how you want to trade them. You guys have seen me. I trade them a lot on 15.5 hourly. Those are my go-to. Coming from social media, it was always about market makers taking money. Yeah, that's literally what it is. They keep the market balanced and liquid. And you got to think too, it's not just market makers that are out here. There's contract writers. There's people that have shares of stuff that are writing puts, writing calls, that they're the ones trying to take your money. They're the one using TA, doing these other things to basically bait you into taking trades that are not probable, right? That you're either going to get IV crush. That's why, like, dude, do you think that there aren't people on Twitter that are hyping up like earnings and writing puts against them or writing calls? Like, dude, it's like there's so many different players in this game rather than market makers. Market makers are there to provide liquidity and facilitate price to levels where there's liquidity at, right? It's options writers, so those are the ones that are trying to take your money. So playing devil's oh my bad. So playing devil's advocate, let's say Nvidia after earnings it shot up, green boner, that would be an imbalance candle. So safe to say it needs to be retested. Or so Nvidia. Let's look at Nvidia really quickly. Does this all make sense though, guys? We all good? What's up, K-Bar? Appreciate the follow. You didn't have to do that, man. I really don't care about getting followed on this thing. These don't look like imbalances. Right off the bat, I mean, we do still have higher lows. Trendline was broken, of course, but you'd maybe look for this to get retested tomorrow. That's high volume. That's what you'd want to see. These aren't imbalances, though. Go to the hourly. This could be. I could see that happening, especially if buyers can somehow catch. Right, it can move back up through here, kind of take that out. Something to keep on watch. But from a daily perspective, it already did retest that level. So retest already happened. You'd look for a lower low to be made or a higher low catch. And if a higher low is caught, it's for sure. Shouldn't say for sure, but yeah, you'd look for potentially. Oh yeah, that's actually juicy. Yeah, so that's an imbalance candle. So you got me on that. Yep. You just look for a higher low to be developed. And you could probably trade however it gets there, right? The break, base, back up to fill that. But as always, though, you got to be careful. Nvidia does look like distribution. Okay. But yeah, good eye on that. I mean, that's the hard part. You don't want to get caught thinking everything's an imbalance. Remember, it needs to be very, very quick, volatile price. That's why I like to look at it on like a 5-15 hourly, because it's intraday, right? It's very easy to identify. When you get into like daily, hourly, or daily and weekly, it's a little bit more difficult. What's up, Johnson? How you doing, buddy? What's up? Gurgavin pumping PayPal lately. Yeah, I mean, that's how you gotta start thinking about things, guys. Like, that's why I hate Twitter. I really do. Like, obviously I'm blessed to be able to have like a good following, but like I'm getting so far away from it. I don't enjoy it. There's a lot of weird people on there. There's people that are putting out bearish charts, putting out all this like this complete bullshit to really get views now and monetize certain things, and then you have there's a lot of people that are writing stuff against what they're charting, right? Or they're charting something like, dude, especially with big followings, they're pumping them. It's just such a sketchy place. And a lot of people don't think about that. Like, you got to start thinking a lot of these people are your competition, and they are. They're there to take your money, and now they're taking your attention, which is also your money. Oh, you're thinking of like okay, like this. Talking about this area? I mean, yeah, that's a lot of potential. That's a liquidity void. So price could freely trade back down here, and then you'd have a discovery of price down here. So there's a lot of potential, like, you know what I mean? And then price will be figured out there, but that's a lot of back and forth, back and forth. There's a lot of liquidity that could be built here, right? That's why these areas are sought after. So it's it's possible. You don't know how long it'll take. If that's the area you're talking about. Alrighty. I think that's good. We have 50 viewers. I appreciate it a lot, by the way. Hopefully you guys didn't get any ads. I don't know how. I could probably take off. Actually, I can't. I do like the Twitch, though. We can all kind of just chat in here. You guys can type. I can get free people in here on Twitter. I could have the Discord in here. We can all intermingle. But yeah, that's it, pretty much. I'm not going to do a trade review in front of everybody because that would be kind of lame. That would take a while, but I mean, Meta is the same concept. Meta was a daily FVG, right? Daily. I mean, this is how I would use a daily fair value gap. You have here, right, imbalanced all the way to here, and then it's starting to fill the imbalance back up, right? And then you have that in tandem with an actual earnings gap, right? So you have the earnings gap here to there. That's why you saw such a violent move down. I still think it goes actually even lower. But that was a big reason for this trade today. Why? And this is why I felt confident taking this short. If you guys remember, I ended up getting in as it broke, and then it retested, and then it kind of held here, and then finally snapped under these lows. And then look at that. I mean, it sold down, and then you actually got your retest of that level. So this is almost the same exact thing, guys, as SPY. I didn't even see this chart till now. And that's why I try to tell everybody too, if you feel like you missed a trade, don't just skip it. Keep it on watch still, because a lot of the times that you'll find that these levels get retested for a much safer entry, right? Like this, sure, we won on this one, but this wasn't really a retest. You know what I mean? It was just a break and a consolidation, a bear flag, if you will, and then it sold under the lows. Right, that trade was kind of stressful to be in. You don't know if it's going to wick back up. We know how much I hate gaps, right? But then it sold off, didn't fill the gap, pushed back up, actually retested it, right? This is your actual retest, and now it's selling off. This would have been a better trade, right there. And that's why I'm trying to emphasize too that it's okay not making 400% on a trade. Right? Because odds are it's a fucking stressful trade, and they're not having size on that, right? If you're just patient and it ends up doing what you want, I would rather take a 60% trade where I'm sized in with $5,000 in my full size, than taking a sketchy ass trade where I'm shaking the I'm not saying I shake, but like how some people are. They're sweating, they're shaking because they have 40 grand in on a trade it's not a picture perfect setup. You know what I mean? So, and I would rather the latter. I'd rather take 60% on a high confidence trade than 400% with not a ton of size because I'm not sure of it. You know what I mean? I just noticed Meta. That's actually a really nice potential trade. It's got like 4 points tomorrow. We'll see how it ends up opening. Might play that one if market has a bad print. Oh, sorry. Yeah, I know some of the ads can be a little bit obnoxious. Yeah, I mean that's how it'll start to click for you guys. It really will. Like and you guys will see too. Oh my God, where was it? I'll do this really quickly before I get off. Where was it? Where was it? Here, right? Okay, so if we rewind this, I brought this up on the chat. What does this look like? Right? Where's my thing at? Where's my little pencil tool? Does this not resemble a potential inverse head and shoulders? Right? And this is where you have to be like just a logical thinker. Where are you buying a right shoulder at? But it's not picture perfect. This is where you have to be analytical and think about what you're buying. Where are you guys buying at if you buy this? Johnson, I want you to answer. Where are you buying if you end up buying that right shoulder? You'd be buying a lower high, and you'd be buying right in supply. And you're buying right here at this liquidity zone that just got swept. See the forest for more than just the trees. Like I'm telling you, do not think that like things get set up so that way people that had just went to Barnes and Noble and bought How to Trade, right? Do you think the market would be really easy if we just fucking put pieces together and traded like that? You got to see stuff way differently. I think I even put it in the chat while it was happening. Yeah, right here. Probably should have added at 449. I see the massive inverse head and shoulders forming, but I don't think it plays out. This has recovered a ton of ground. It makes sense to sell back to equilibrium rather than complete a V shape and rally further. Both sides have been swept today. Sell side just got stopped out. Can only assume buyers would be tempted with this inverse head and shoulder formation and willingly buy the top of supply. You would not buy that. No trader in their right mind would buy this unless you were like trading an inverse head and shoulders, right? So buy side stop, sell side stop. Now there's more liquidity going to be gathered here because now buyers are trading an inverse head and shoulders in supply at a huge liquidity zone, right? Who do you think gets stopped right there? And then what do you guys think happens, right? People flip, right? They flip to go short. What do we know happens right here? Like this should all be clicking for you guys. There's a fair value gap, right? Everybody that says, "Oh fuck, that went short on the inverse head and shoulder, now goes long or now goes short," only for them to get stopped out one more time because now what is it going to do? Retrace back into their, like, dude, come on, guys. Come on. And with that, I'm going to conclude the session, though. I'm going to jump off. Hope this was not eye-opening, because we're going to do this every day in the Discord, but hopefully this kind of like clicks, right, with where you want to start looking for stuff, how you want to start viewing structure. You're not always going to get stuff that's this simple, right? This was a really nice opportunity here. Typically, what you'll end up getting is that break, retest right off the bat, and then a sell lower. But this was a beautiful opportunity for it to not retest, right? And then you had 2 trades here. These are the best kinds of days. V-shaped recovery, right? No retest off of liquidity zone. You can find where to long it. Obviously not here, but wait for the trend. Target would be this level here, right? And then target back to the... Oh, dude, it was a beautiful day. I would bookmark this map, oh my god, bookmark this day and go back to it, because this is a beautiful price action. Everybody good though? I'll stay here for like 5 more minutes if you guys need me to. If you guys have any more questions, I'll put a timestamp on it. I got till 5:30. I'll give it 4 minutes. But everybody good? Does that make sense? You guys all... Remember, I'm here to take care of you guys. I'm here to make sure you guys understand stuff. If not, though, I'll go ahead and jump off. I'm gonna get dinner made, everything like that. A lot of time in front of screens. You got to do the same exact thing. Cool. Alrighty, I think we're seeing a lot of people dip out. Don't think we have any more questions, but awesome, guys. All right, I appreciate all you guys. Hope you guys learned something here. This will be uploaded as a recording in the education section for like a daily recap, but I'll see you guys tomorrow, all right? Take care.